What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we see the S&P 500 getting back up to the 200 daily moving average as we are now coming into the very critical bear market resistance area. Will the bulls rest at resistance or try to break right through resistance now? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so if you are enjoying being on the right side of the trade and you are enjoying being long during this bull trend because you're following all of the information I'm getting you, let me know by smashing that like button, and I want to see no less than 2,000 likes on this video. Remember, when you have a trade plan and you are following price action and trend, you are going to be on the right side of the trade, and it is going to feel very good when you are making money as the stock market is moving in the right direction. But you also need to understand that as bulls, you cannot get greedy, and you have to understand we are getting into some very critical resistance levels. Now, do not confuse resistance with meaning that we cannot go higher than this resistance level. This is going to be a level of interest that you want to be very cautious at, and you will want to consider locking in profits as we come into this strong resistance, because you are going to have two pressures that could drive price lower. You are going to have bulls starting to lock in profits, and you are going to have the big bad bear starting to short the market. Now keep in mind, the big bad bear has a big brain, and that is why he has been sitting on the sideline, and he knows that the bulls are coming at him with an army of retail bears that are going to get absolutely obliterated as they squeeze through resistance. So I do have a downward trending arrow because I do think we are getting very close to a pullback, and I don't want anybody to tell me that you didn't see it coming. So there is a giant arrow pointed to the downward direction for that reason, but you need to be very cautious. And if you're going to try to short just because I drew a downward arrow on my chart, you have to remember that the rules that I have are that you have to lose support, which means we need to see price action losing our support trend line. There is no way you should try to short a bull trend while we are above support. All of the bears that continue to try to short this market and they want to brag about it in the comment section, the bulls are laughing in your face. They're reading what you're saying about loading up on puts, and they watch the market go higher each and every day, and your power and your fear is starting to go away because the bulls see that you are completely full of it, and the market continues to go higher no matter what you spew out of your mouth about why the market should be going lower. So for that reason, do not be part of the dumb money that tries to short just because we're going higher. Wait for the confirmation of the breakdown through support, and then you can start following the arrow that I drew to the downside. Now, the reason I say this is because there is a very real possibility that the bulls are going to go absolutely psycho tomorrow, and they are going to try to gap the market up over this resistance because the price action is very close to resistance. It would be a very easy gap up, and then the bulls will try to squeeze all of those bears out of their position, which can lead to a very impulsive exhaustion day, and that will likely tell us that every single bear that is barely hanging on by a little bit of a thread is going to finally capitulate out of their short positions, and that is the only way this rally is going to end. So I do not believe this rally is over, and the only way I'm going to believe this rally is over is if we break down through that support level. So there is a real possibility that we are going much higher, and it's going to look very vertical as every single bear is getting short squeezed out of their positions if we blast through that resistance, and that is going to finally put an end to this rally because the bears will have officially given up, and the exact moment those bears give up will actually call a local top, and then we will very likely start getting this pullback. So I continue to warn you to not try to call a top in a bull trend, and I continue to warn you to not try to short this bull trend because you are very likely going to end up being part of that crowd that is going to be getting squeezed out above resistance. Now, I could be completely wrong, and I still want you to respect this level right around SPY 432 because that is also going to be a level the bears might show up at, and eventually some of the bears shorting this market are eventually going to be profitable. It's the bears that have been shorting the entire way up that are never going to turn a profit on their trade. So just keep all of this in mind, and that's why I spend extra time going over these scenarios, because I want you to understand the psychology behind trading. And smart money is not going to allow the market to go lower when there is record amounts of retail bears piling into short positions. So I do favor the gap up exhaustion day, and I think we're going to see it this week. And then I do believe the market will need to cool down, and we're going to get that pullback. And some very valid areas to get a pullback to would be our signal level at SPY 421 and this level of interest around support at SPY 416 and the gap fill at 413. So remember, do not just blindly short the market because I drew a downward arrow. Wait for the market to lose support and then the bull trend will be a lot weaker, which is going to open up more downside as more people start to sell and more bears start to short the market below support. Remember, disciplined bears do not show up until support breaks. Otherwise, you are just trying to gamble and call a top, and it's very difficult to do that. So as bulls, I want you to up your risk level in SPY up to about 425 and 421 because you will want to lock in profits if we're coming all the way back down to 413 or 408. I do not want to see any of you bulls getting caught holding bags. Be disciplined and lock some profits at resistance, and make sure you're definitely locking profits if we break below our risk levels. On the NASDAQ 100 triple Qs, we were down 0.23% today, and we see the triple Qs did find support intraday off the 5 EMA, but also found resistance intraday at our resistance at 334, which is always going to invite profit taking and short sellers to step into the market once we hit a resistance level. Now keep in mind, on the triple Qs, we could easily gap over this resistance and start marching higher towards the 200 daily moving average at 342, which goes hand in hand with the exhaustion day that I was talking about on SPY, where we could actually gap up and make a very impulsive short squeeze move higher before we start getting any amount of pullback. So I'm drawing this out to help you visualize how these things work. So do not just look at the arrow and assume this is exactly what has to happen, because while I do have a good read on the price action and the trend, even I have no idea exactly what's going to happen tomorrow, but I do have very strong belief this is a very real possibility. So in the triple Qs, if we gap up over 334, that is going to lead more and more likely that we're getting the short squeeze up to about 342, and that is going to likely be the exhaustion day before we get the pullback, which could take the triple Qs all the way back down to fully close the gap at 319. So do not rule out these scenarios, so make sure you're managing your risk. And on the triple Qs, I want you to manage your risk right around 327 and 324, because if we lose those support levels, we are likely going to get the full pullback. In the Dow Jones, we were up 0.7%, and the Dow Jones had a very bullish day with the second day in a row closing back over the 200 daily moving average. So you can very clearly see the Dow Jones is leading the way higher after getting that bullish breakout, and we did close above the price target at 341, which opens the door for blue skies all the way up to the gap fill at 347. This goes hand in hand with my theory that we are likely going to get the exhaustion day tomorrow, because it does look like the Dow Jones wants to go straight to 347 without looking back. Keep that in mind. That is a very impulsive move higher with about a 6-point move in one day, and that is very likely where the Dow Jones is heading. Manage your risk around 341, 339, and 337, and stay bullish as long as we're above those support levels. If we break down, you're looking for the gap fill below at 329 with strong support at 333. On the Russell 2000 IWM ETF, we were flat for the day, only going down 0.04%, with the third day in a row closing back over the 200 daily moving average, and we still have the very strong bull trend, with the next upside price targets at 205 and then 207. You're staying on this bull as long as we're above 199 and 197, and if we break those support levels and break down below 196, look for the gap fill at 192 and support zone at 191. So you're instantly getting a lot more risk off if we start breaking down below 197. On the ARKK ETF, we were down 2.78% as the ARK ETF continues to bash its head against 52, and there's just way too many sellers at that level, which is making it very difficult to get the bullish breakout. The next bull breakout will be the break above 52 for the next price target at 55.5, and above that we could start to get a very impulsive bull rally that could take us back up to about 66. Don't look too far ahead, because as you can tell, we can't even close above 52, and your risk level to the downside is at 49 and 47, and if we break below 47, you are getting very bearish because we're likely going for another leg lower. On the VIX, we were down 1.3%, and the VIX closed down below 20 yet again, so that is now 4 out of the last 5 days of the VIX closing below 20. So I continue to tell you that fear is leaving this market as the bull trend strengthens. The next likely price target for the VIX will be down here at 18, and we're not getting bearish until the VIX spikes above 24. On Bitcoin, we're currently down 0.7%. Bitcoin's trading right at that support at 24,000. It has the full bull trend. It's sitting right on top of support, and it's getting a Bollinger Band squeeze, which tells us it's likely getting ready for a monster move. I still have strong belief that Bitcoin is going to skyrocket off of 24,000 and start trending up towards 28,000 and then 32,000. So stay bullish as long as it's above 24 to 23,000, and you can get a lot more risk off if we break down below that support zone. Continuing with our big tech hot stock names, we have Amazon breaking through resistance today, closing back over 144, but still finding sellers right there at the 200 daily moving average. So we will have a little bit more resistance, but as long as we're above 144, we are very likely trending up to 152. Expect there to be a lot of sellers at 152 because that is a very strong resistance, and you can now use 144 and 138 as your risk levels. Stay bullish above support because we do have a very strong bull trend, and we did see an increase in buying volume today. On Microsoft, we were down 0.26%, but Microsoft is still building a very strong bull trend as that 20 simple moving average is getting ready to push price higher. And our next upside price target is going to be the gap close at 296, and then we could start trending up to close the gap at 309. Your risk levels on Microsoft are 290 and the top of this gap right around 287. And if we break down below those support levels, look for the full gap close at 283. On Nvidia stock, we were down 0.8%, and Nvidia continues to close above all the moving averages with the full bull trend, and we do have the higher lows and higher highs. So the next bull breakout will be that breakout above 192 with upside price targets at 196 and then 213. Stay bullish as long as we're above 181 because that's your critical risk level. So as long as we're above support with the bull trend, you will want to continue to expect higher prices. On Tesla stock, we were down 0.89% with Tesla closing back over the 200 daily moving average for the second day in a row and holding that support zone right around $900. Stay bullish above 900 for the next price target at 970, but if we break below 900, look for a retest of 864. On Apple stock, we were down 0.09% as Apple is finding a lot of sellers just below this gap fill, which is completely normal to see a slowdown day as people are taking profits. But as you can tell, the magnet is still pulling Apple higher to fully close the gap just above 174. Expect more sellers to continue to step in as Apple reaches that price target with critical support to the downside at 170, and below 170 you're looking for the full gap close at 166. Remember, Apple is a market moving stock, so if it breaks through this resistance level, that is going to be extremely bullish. On the financial sector, we were up 0.73% today, and we still have very strong bullish price action with the very strong bull trend. The industrials were up 0.45% today, and we continue to see very bullish price action with a very strong bull trend. The healthcare sector was down 0.27% today, but we still have full bull price action and a full bull trend. The energy sector was down 0.23%, closing back over the 5 EMA and starting to develop the bull trend, but if we lose the support at the 20 simple moving average, be cautious of a potential double top. So jumping back over to the S&P 500, do not be afraid to follow the bull trend, just manage your risk at the critical support and risk levels that I'm giving you, and do not let fear drive your trade plan. Your trade plan should be objective and you should know exactly what your entries and exits are, and you should be trading in the direction of the trend. We are absolutely crushing this market on the Stocks Channel Discord, so if you find yourself needing help following the price action or managing a risk, you need to get in the Stocks Channel Discord server where you are going to level up your trading game and you are going to become a much better trader very quickly. We're coming into some very critical resistance, but do not confuse that with guaranteeing that we have to get a pullback. Follow the price action and let the price action do all of the talking because price action is king. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF QQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to join Bank Trade Alerts, you can click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.